Have you ever felt like the world is changing, but no one stopped to explain what's really happening? Donald Trump has pulled the trigger on one of the biggest trade wars in recent history, a massive tariff move that promises to reshape global trade and hit your wallet directly. Cars, electronics, clothes, get ready to see prices skyrocket, investments shaking, fear already gripping the markets. But every crisis brings two options. Either you're swept away by the wave, or you learn how to surf it. And that's where today's talk begins. I'm James, and I'm here to break down what's behind this new economic war, what's about to change in your daily life, and most importantly, what you can do now to turn uncertainty into opportunity. If you want to be among the few who truly understand and take advantage of this shift, stick with me until the end. The U.S. national debt has reached an alarming milestone, $37 trillion. Although the U.S. has historically been seen as a safe haven for investors, the accelerated growth of debt is now worrying even the most optimistic economists. For years, the combination of low interest rates and strong demand for U.S. bonds masked the problem. But now, with higher interest rates and a persistent fiscal deficit, the bill is coming due, and it's unsustainable as it stands. This massive debt didn't build up overnight. It's the result of decades of rising spending on social programs, military defense, infrastructure, and more recently, pandemic stimulus packages. Although a strong economy can sustain high debt levels, the current slowdown in growth and soaring interest costs are leaving the government with fewer and fewer options. It's like the U.S. is running on a treadmill that's speeding up every minute, and there's no emergency stop button. This explosive debt situation is the backdrop for understanding why radical measures like Trump's tariffs are emerging now. More than just a trade issue, this tariff war is a desperate attempt to revive industrial competitiveness and boost internal revenue without raising taxes directly on the population. In short, without fixing this dynamic, America's economic stability and the average American's way of life will be seriously at risk in the coming years. Slept for decades, as the U.S. focused on expanding its geopolitical interests and reinforcing its global dominance, many countries took the chance to quietly build trade barriers against American products. Behind the scenes, tariffs on cars, agricultural products, electronics, and countless other items were imposed in key markets, creating an increasingly uneven playing field. While American markets remained relatively open, other countries closed theirs tighter. This distracted foreign policy eventually had devastating cumulative effects. Industries that were once national pride symbols, like automotive and heavy manufacturing, lost ground to foreign competitors operating with tax breaks and protected home markets. American brands were gradually replaced across multiple sectors, and slowly but surely, the Made in USA label became a rare sight abroad. When Trump says that other countries tariffed America while it slept, it's not just political rhetoric. There's a real history of trade agreements that, under the banner of diplomacy, allowed European, Asian, and Latin American nations to create policies favoring their own economies, often at the expense of American industry. Now, the massive tariff move is a response to decades of complacency, aiming to rebalance a game the U.S. was already losing badly. What changed? Donald Trump's announcement marked a turning point in U.S. trade policy. Instead of long, bureaucratic bilateral deals, Trump decided to act directly. If a country imposes tariffs on American goods, the U.S. will impose proportional tariffs in return. It's a move that's unprecedented in both scale and speed, informally dubbed the Economic Independence Day. The logic is simple, and to many Americans, extremely fair. The numbers were made clear and public. Countries that historically charged high tariffs against the U.S., like China, Vietnam, the European Union, and others, became direct targets. For example, China, which levied average tariffs of 67% in some sectors, will now face U.S. tariffs of 34%. Vietnam, a major exporter of apparel and footwear to the U.S., was hit with tariffs as high as 46%. Even countries like Brazil, usually seen as friendly trading partners, weren't spared, hit with a 10% tariff. But Trump's move isn't just economic, it's deeply political. He wants to show strength in an election year, signaling to American voters that he's willing to defend jobs, revive national industry, and cut foreign dependency. More than a trade move, it's a repositioning of the U.S. on the global stage. The real challenge now is whether the world will accept these new rules without retaliating, and whether the American economy can withstand the shock. Financial markets reacted fast and furiously to the news. As soon as Trump announced the tariffs, futures markets tumbled, signaling fears of a potential new global trade war. Giant companies like Nike and Apple, heavily dependent on international production chains, were among the hardest hit, seeing drops of up to 7% in a single day. On the other hand, traditional safe haven assets like gold skyrocketed. Gold broke above $3,160 an ounce, hitting historic highs. In times of uncertainty, investors rush toward stable assets, and gold remains a top choice. This surge shows that the market isn't just reacting to a temporary shock, it's preparing for prolonged instability. Even Bitcoin, often seen as a hedge against traditional markets, took a hit. Before the announcement, Bitcoin hovered around $87,000, but after the tariffs news broke, it plunged to $83,000. The fall of cryptocurrencies shows that in real uncertainty, investors still prefer old-school safety over digital volatility. The message was clear. This tariff move is not an isolated event, it's the start of a turbulent new era. At first glance, a trade war might seem like something far away, but make no mistake, the effects will hit your wallet, and faster than you think. Everyday essentials like cars, electronics, and clothes are among the most affected by the new tariffs. If you're planning to buy a new car, for example, here's some bad news. Trump imposed a 25% tariff on imported vehicles. That means SUVs, sedans, and trucks from abroad are about to get a lot more expensive. The U.S. auto market was already dominated by foreign brands like Hyundai, Toyota, and Honda. These cars became favorites because they offered better value for money. Now, with the new tax burden, buying a new car will be more expensive, not just for imported models, but even for those partially built overseas and assembled in the U.S. In other words, even assembling parts in America won't be enough to avoid price hikes. And it's not just cars. If you were planning to grab a new iPhone, a pair of Nike sneakers, or an Apple Watch, get ready. Tech products and apparel will also be hit, especially since much of their production comes from Vietnam and China, the biggest targets of the new tariffs. Bottom line, prices are going up, and the purchasing power of the average American is already shrinking. Trump's tariff move is about to hit your lifestyle directly. When we talk about a trade war, it's impossible to ignore China. More than any other country, China was the main target of Trump's massive tariffs, with tariffs reaching 34% on various products, plus the older tariffs already in place since his first term. It's clear that the goal is to slow China's economic growth and reduce America's dependence on Asian production. China's rise as the world's factory was fueled by a powerful combination: state incentives, artificially devalued currency, and most importantly, extremely cheap labor. This allowed Chinese goods to be sold at much lower prices than their Western competitors, making it nearly impossible for American and European industries to compete on equal footing. Trump, like many analysts, sees this model as having benefited China at the cost of U.S. industrial decline. And as expected, China has already responded. Beijing confirmed it will impose reciprocal tariffs on a list of American products, increasing the risk of a full-blown conflict that could drag the two largest economies into a prolonged trade war. A double tariff battle could drive global prices even higher, make raw materials more expensive, and severely disrupt supply chains. Bottom line, the clash with China is the epicenter of this new phase of global instability, and the ripple effects are already being felt worldwide. And you? Do you think the U.S. is right to face China head-on like this? Let me know in the comments. With Trump's tariffs in motion and China's retaliation already announced, the future of the global economy looks more uncertain than ever. By analyzing key indicators and market behavior, we can outline 3 likely scenarios over the coming months, each with very different impacts on your money and investments. The pessimistic scenario would be the worst case, a prolonged global recession. In this case, tariffs would trigger an inflationary spiral, pushing up the cost of basic goods like food, fuel, and electronics. With inflation rising, central banks would be forced to keep or even raise interest rates, choking economic growth. New geopolitical blocs might also emerge, fragmenting global trade even further and making recovery painfully slow. The realistic scenario points to a moderate recession, with a possible gradual recovery starting in 2026 or 2027. Here, the tariffs would still hurt, but stimulus measures and diplomatic efforts would prevent a full-blown collapse. Inflation would stay somewhat under control, and interest rates would start to fall slowly, allowing the economy to get back on its feet steadily. The optimistic scenario would be a short, sharp recession. Even with high tensions, the trade conflict would be contained. The economy would experience a quick drop in 2025, but bounce back strongly by 2026, helped by falling interest rates and rapid adjustments in global supply chains. For savvy investors, this would create incredible buying opportunities at rock-bottom prices during the chaos. Crisis also means opportunity. One timeless truth in the investment world: the greatest fortunes are built during crises. While most people panic and sell off assets at a loss, smart investors use the chaos to buy quality assets at deep discounts. And that's exactly what today's environment offers: high risks, but massive opportunities, for those who are emotionally and financially prepared. With stocks, tech companies, and even real estate expected to take hits over the next few months, smart investors should get ready to act. That means keeping an emergency fund solid, reviewing investment portfolios, focusing on sectors less exposed to tariffs, and watching for strong companies that keep generating profits even in tough times. Remember, volatility isn't your enemy if you have a strategy. It's your best friend if you have patience. Also, now is the perfect time to double down on learning. Truly understanding how global markets, tariffs, and economic cycles work will allow you to make better decisions and avoid being just another panic-driven seller. The world has changed, and those who can read the signs now will be the ones leading the next wave of growth. Bottom line, don't fear the crisis. Study, prepare, and take advantage. If you made it this far, congratulations. Today you learned that Trump's massive tariffs are much more than a political move. They reflect deep, unstoppable changes happening around the world. Exploding U.S. debt, unfair competition from other countries, direct impacts on your spending and investments. All of it shows that anyone acting like nothing is changing is about to be steamrolled by this new economic reality. But you don't have to be among those left behind. Every crisis opens a window of opportunity, and those who prepare now will reap the rewards later. And to help you even more on this journey, I've pinned a comment below with a list of must-read books for anyone serious about understanding economics and finance. These books changed my view, and I'm sure they'll change yours too. So go check the pinned comment, smash the like button if this video helped you, subscribe to the channel for more insights, and let me know in the comments. Do you think Trump made the right move with these tariffs? I'll see you in the next video. Let's ride this new economy together.